So, got the market news from February 28th to March 1st. It's a pretty eventful week, you know. You had the Fed talking, had Russia fucking shit up still. A lot of earnings. These weren't earnings, but gave us some stats. Lyft is down 5% in their workforce growth for the year. And not just that, they're also cutting offices too. They're down like 19 offices. Uber and Dash, though, on the other hand, they're actually up like 30% and 50% for workforce growth. They got not just that, but their Uber's up actually in more cities, and they got more employees, and same with Dash, and they're up a whole lot more employees. That shit's wild. But also, Uber had a good time with this pandemic, most definitely. Their deliveries, as you can see in this picture, just went up constantly. Basically doubled too from 2019 to 2020. So also in the news, we got all these companies, basically every company you can think of, just not fucking with Russia anymore. And hey, would you fuck with Russia after the shit they was doing, you know? It's obvious they're taking a huge toll from like all this bullshit they've been doing. Like there's a ETF that follows like the biggest like Russian companies basically out there, and it's RSX. That is down over 60% for just this week. Like, this dude is not planning on this shit happening. The only good thing that Russians got really was Bitcoin. Like, but hey, you guys surprised really? Like, Bitcoin's been a company. Well, it's not a company, but it's been like a use for these launderers and criminals and, you know, tax evader. Like, hey, it embraces those criminal aspects. And that's why it's truly for everybody. Bitcoin like went from 37k to 45k once like this news broke out, but it's retreating after that. That was a good time to trim really. And then commodities too, they just still going. I got a little commodities portfolio, that shit up like 14% for the year, while the S&P down 14% for the year. It's a nice little hedge. Now, Coinbase, they gave earnings actually last week, but we're going to talk about it because crypto, you know, this shit. They had some good numbers. EPS beat expectations. Revenue beat expectations. They verified users grew. Their monthly transactions grew. Look at that. Their users, this little graph just shows bonus. Coinbase got a lot of growth. Not just that, they be handing out money. I'll support Coinbase, even though they got fees out the ass. They're a nice little app. But for overall, for the year, because their stock took a hit since like this correction's been happening, but for the year they're down 30%. Zoom, for the year they are down 30%. But they gave us some good earnings basically. But the bad part was their future growth really ain't looking so good. But they beat expectations in EPS and revenue as well. Their their customers who are actually putting money into their shit, it grew like a little bit, but it still grew. And yeah, they also got approved for a repurchase program for up to like $1 billion. And yeah, if they go to repurchase their stock, like shit, I might too, you know. But no, Sofi, another company that's questionable during times like this, gave a lot of good numbers though. But just like those other stocks, boom, last 3 months, basically this year, down 30%. As you can see though in this graph, their members just constantly grows. That's a good sign for little companies like this constantly growing. But this is like a little financial like app type shit, like a little banking shit, and it got approved for a national banking charter, so it's official now too. They grew members like over 500k just in the fourth quarter, and they also almost 1 million at 900k new products too. So they making progress, you know. Another little company that's quite, hey, Warren Buffett was over here buying this stock though too, so keep buying it. I'm looking into it, you know. So Snowflake, they got earnings of a loss of 0.43. That was around like expected, probably a little better, but still, if it's a company not making money right now, I'm not really putting that much money. I don't want a big position right now in it. Like, you got 6k customers. Alright, they got the slowest revenue growth too since 2019. That's not good. We want growth right now. Gross margins didn't meet expectations, but revenue beat expectations, and they had also had over 100% growth for the year prior. But just like those other stocks, that shit dropped over 20% after reporting this, because that's just not good enough, especially with this little scary times. Smith & Wesson, another stock, dropped 15% just after reporting its what's it called, these numbers. Sales was down from didn't even meet expectations. Earnings was down too from the year prior, didn't meet expectations either. But also Smith & Wesson's down 33% for the past 6 months. Lockheed Martin, actually, that's like a warfare business, that's actually up like a good amount. But they was having some tough times a couple months ago. So like Smith & Wesson, on the other hand, this chart just shows it, like they was having a good past 2 years because of COVID. People was just getting a gun license, I guess, buying guns out the ass. I mean, hey, why not? Another stock that just had a really good time during COVID was C. That's like a gaming company, and it had bigger returns than Tesla really during this time. Now, it didn't really hit like their expectations in earnings, but they seemed like a big increase in growth really from the year prior. But overall, the stock is down 70% from its high in November, and it dropped 13% just after giving out like these reports. But this graph shows really like the blue line is like actual stock price, and then the green line is like the mean, like the average, like target price for the stock, and it's always above, and a good amount above really. But as you can see, like the lowest target price, it just went under the actual price after these reports. Salesforce, it's a cybersecurity company, and that's a great little industry to be in right now, especially since Russia loves hacking. But overall, it has a lot of growth, and they had a lot of growth too during COVID. Right now, for the year, it's down 15%. Like S&P is down like 10%, so it's underperforming compared to that, but it's still a good stock to be in. But its earnings report was good too, beat expectation in earnings and revenues, and for the quarter, it showed growth of 26%. This graph shows, boom, Salesforce annual revenue just constantly getting higher and higher every year. You need stocks like that. Now Target, it's been having a good time too since COVID happened. Stock rose 10% after giving out its earnings report this quarter. Now it beat expectations in EPS, but in revenue it didn't beat expectations. Net income rose 12%, and they showed like a good sales growth that beat expectation of 13%. This graph shows how basically Target's having a lot better growth. A lot better growth than Walmart, especially during this COVID time. But hey, that's expected. Walmart's a really big company. It's noticeably like has a bigger market cap than Target. Not just that, it has like a better dividend. Target has a good dividend too, though. Best Buy, I'm not with these retail stocks, but they make some big news recently. Their stock, like Best Buy stock, rose 9% after giving its earnings report, and it had the same expectations of EPS. It didn't even meet expectations in revenue, but it raised its dividend by 26%. And Best Buy always had really a good dividend, so that's just good to see. And as you can see too, like in this graph, basically every aspect, like its revenue, its earnings before tax, its net income, its margins, its gross profit, had nice little growth ever since like the COVID time. And in 2021, it's a crazy amount of growth. Kroger, that's a great stock to be in. Warren Buffett got this stock too. It's like everyone knows Kroger. Beat expectations in EPS, sales, its sales growth even, and it basically doubled its expectations in sales growth to 4% when it was 2% basically. And as you see, like every quarter, it beat expectations in its earnings since 2021. The past 4 quarters, just beating expectations. The stock's up like 50% past year, and S&P is only up 15%, so that's overperforming that. When this is a safe stock shit, like shares rose to like 6% after they gave these numbers, and this stock's not volatile, so 6%, it's a nice little movement for that stock. HP, now, this is a tech company people really forget about. It's underappreciated. It got a nice dividend, nice numbers. This earnings report gave out some good numbers too. Beat expectations in EPS and net sales, and for its printing sales and commercial computers and the personal system sales, all showing an increase and beat expectations too. But like everything else is down, especially tech. It's only down 10% though, but this stock really is not volatile either, so 10%, that's a nice little correction for this stock. You can be getting at a discount right now. Hey, Costco. Now, this is a great stock for all times. COVID showed nice growth, nice returns. During a recession, boom, still gotta do the same shit. Beat expectations in EPS by a nice amount. It's 2.92 versus 2.73 expected. Beat expectations in revenue. Beat expectations in sales growth. Boom, and then the e-commerce sales rose 12.5%. Boom, and this picture shows the last 4 quarters, well actually last 3 quarters it beat expectations in EPS, but in March 2021 it actually didn't. But still, Costco's a lot of analysis, not even just analysis, but like Charlie Munger even shouting out this company. Like Costco's always a little safe bet to be in. Got a dividend too.